Good morning, everybody. Happy Friday. How we feeling? Feeling good? It has been a pretty wild week in the markets. Interestingly enough, when we talked about what we were anticipating on Monday, obviously CPI on Tuesday and FOMC on Wednesday were the two main events. I saw people calling it the Fintwit Super Bowl. I thought that was pretty funny. But the market didn't give that crazy of a move. Now, however, the past 2 days, we have seen some pretty severe selling, and it looks like the market is finally making a push lower. So, to talk about this week's trading action and to talk about what we are looking for headed into today, we've got an awesome panel of traders for you guys, starting with Diamond Trades. Noah, good morning.
What's going on, guys? Really crazy week. Excited to chop it up with you guys before the weekend.
All right, Money Mander.
Happy Friday, guys. Crazy week, as Diamond said. Ton of volatility here, so I'm pretty excited to wrap it up here today and move on to next week personally.
Yeah, I think a lot of people can agree with that. We'll get into that later on in the show. All right, Ramsey Rippers, good morning to you.
Morning, brother. Yeah, man. What'd you call it? The stock market Super Bowl this week? We got to end it off today with a bang. Quad witching. Let's do it.
Oh, that's right. We have OPEX as well today. How did I forget that? Crazy week, guys. Crazy week. Okay, and then last but not least, Snipes.
Good morning, guys. Been sick all week. I'm happy to be back. Let's get some bags.
Let's do it. All right. So, unfortunately, we had to cancel Wednesday's episode. So, Mander didn't get the chance to give his whole spiel. He had prepared an entire document to get you guys ready for FOMC, which, from what I heard out of you in live voice when we were trading, what you predicted to happen is kind of what came true. And some of those things that you've been talking about over the past month or so are finally starting to come into fruition. So go ahead and take it away, guys. What do we have as far as Fed forecast and what we saw this week from the Fed?
Yeah, I will kick us off and just a little house cleaning since we didn't see you guys on Wednesday. We had CPI on Tuesday come in lighter than expected. So we had 7.1% versus 7.3% expected. And that's compared with 7.7% from October. So definitely seeing that continuation of a trend, that decrease in CPI. The month over month, which we talked about extensively last week as the number to really watch, also came in light, 0.1 versus 0.3, 0.6 expected. So we like to see that month over month number coming down, as we talked about. This has been a really volatile week, right, amidst the economic data. So CPI and FOMC obviously took a toll on the market. We actually initially popped 3% higher on the CPI print, and then we're down about a little bit over 3% right now from that same point. So just an immense amount of volatility this entire week. Investors are really weighing the end of upside surprises in inflation with the potential start of downside surprises in earnings as the economy begins to weaken here. And that sort of economic weakening effect has been sort of proven, by retail sales, which we got a light retail sales number as well on Thursday. Last thing I'll touch on is that we have OPEX today, triple witching, which is essentially just a simultaneous expiration of stock options, stock index futures, and stock index options contracts all on the same day. So that tends to create a lot of volatility in the market. Historically, we've seen, higher volatility on these days than on regular days, right? Than on just regular normal days. And a lot of that happens before the open. So there's about $4 trillion in notional options exposure, which we get this data from our friend Markets and Mayhem over on Twitter. This is going to be the largest options expiration that we've had really since the COVID crash, right? So we can expect to see a ton of volatility in the pre-market and right at the open. The morning, again, should be especially volatile with about $2.4 trillion of XPX options rolling off. So just stay sharp, maybe not today to full throttle with, all the volatility that we expect to see in the markets given this unusually high OPEX.
Yeah, and a great segue right into this as well in a similar fashion. So with all those options expiring, right, as we got into the end of the year here, these were really holistic 2022 options all coming into today. So we actually have about 300, a little more than 300 billion in a positive delta going into today with all of those. I think Diamond just said like $4 trillion worth of options expiring. That's over a 300 billion positive delta, which all this chart is, and I'll give my man Markets and Mayhem, this came from him as well. I got to give you a little crap for this one. I've never seen something this is taken off a Motorola Razr, but the data is what's important. And so all this really means is we have way more outstanding calls than puts here. That's how you get into this positive delta. And so personally, I think we see a lot of volatile chop today. But if anything, right, it's really going to be a downside favoring data here, where if you're a market maker, right, you want to get to that delta neutral level where you can pin that max pain thing onto the people long options. You sold all these options. So to get to that max pain, ideally you try and drive markets to a delta neutral point, which would be to the downside. And going back off of yesterday's price action, that's where my personal bias, I guess, would lie, is downside today, especially based off this. But now going away from all of that data from today, I'm going to recap FOMC for us here. So we've been talking about all those keys, and Diamond did a great way to wrap that up, where the CPI, the month over month, was the number we were really looking forward to. And we've been talking about this potential EPS crunch and everything going into earnings coming up. And it really looks like investors are starting to weigh the pros and cons there, as he said, where for the first time, I saw Jerome Powell directly answering recession questions on this FOMC release. And unfortunately, I didn't get to do the prep going into it. But what we had to look for, right? The bond market was pricing in 80% probability of 50 basis points on Friday. That's where my intention lied, especially with all the narration we got going into that. I just didn't think they would ever drop that 75 basis point bomb. I was getting a 20% probability. So from then moving on, right, if you're going to get the number as expected on the day release, like the number for December, what is going to drive markets is going to be forward guidance on pace and duration. And so the thing to listen into was, are they going to give any direction on higher for longer or potential for the decrease in rate hikes to continue? Where are they looking to pin the terminal rate for the next 2023 at the end of the calendar year? Where do they see peak? All of that was really what's going to be important. And so if we go ahead and look in, the bond market had, I believe, a 31% probability of ending 2023 next year at 425 to 450. And so the majority likelihood was, we saw, this is what the bond market was pricing in. We saw terminal rate peaking, so like the highest it gets to at 475 to 500 in next March, and then holding there until September. And then they were actually pricing in a likelihood of a 25-point decrease in September, 25 in December, bringing us down to ending next calendar year at 425 to 500. Now, as you can see here, right, these are all the probability statistics as we got into that. So you can see it's broken down by there's likelihood of everything, but these were your majority likelihoods. Now, when we got this dot plot from the Fed in yesterday's release, what we actually saw was 17 of 19 participants saw us ending the next calendar year over 500 basis points. So whether that be 5 to 525 or even higher than that, you could see there was even votes for, it looks like 575 to 600. So only 2 of the 19 participants actually had us ending the year at the terminal rate. The rest foresaw ending 2023 over where bond markets were pricing in we would peak at. So let alone getting those 225 basis point pullbacks, this is like the hawkish thing possible, right? Basically 17 of 19 were higher than they were in September. They were higher than bond markets were pricing in. And so that is what was going to drive market direction. So we really saw a lot of choppy action at the end of the release on Wednesday there, right? We had our initial sell-off off of that, off of the more hawkish outlook, unemployment rate up, all of those things. But now yesterday, we finally saw that fallout, right? That little spill where investors finally got to digest all the data that was taken out. Powell also said, I wanted to take some quotes from when he was answering questions. Powell also said, he was asked when the unemployment rate also went up. They projected an end of 2023 unemployment rate of 0.2% higher than previous. And so when asked about that, they said, do you think this is because of a slowing economy, or what are you really looking at here? And Powell said, because of our dual mandate, as me and Diamond have said, we're tasked with 2 things, right? We're tasked with maximum unemployment and price stability. The unemployment rate and the labor market has been the strongest it's been historically. The unemployment rate's been at 50-year lows. And so all of our focus has to be on maintaining and achieving price stability again. And unfortunately, with the tools we have at our disposal, that's going to cause pain in the labor market. It was word for word. So there will be pain felt in the labor market. Unfortunately, there's no way for us to avoid this. So
Yeah, I mean, look, and it's honestly the way that they've been talking so far. This is sort of really the first, not the first time, but really the first meeting where the main focus, right, has been on the labor market. That's going to be how it's going to be in 2023. And so I'm also very interested to see how the market wants to react. I think that changing of the terminal rate is definitely going to matter for equities in the near future, right, as people sort of adjust what they were expecting for 2023. And we'll see how that sort of plays out and what sort of moves people will make in the market going forward. But that's going to wrap it up for us, and we'll pass it back to Alejandro.
All right, thank you, fellas. Now over to Ramsey for Bet the Bell.
Good morning, guys. So I just want to apologize for our host's low energy this morning. Listen, it's Friday. You snooze, you lose. He who hesitates gets no cake. Today's the day everyone else is hungover. Did you go to the SantaCon bar call last night? No, I don't give a shit, Jack. I woke up this morning with 2 knives in my pocket, a computer mouse in my right hand, ready to annihilate the stock market, baby. You understand me? We're not fucking around today. We are not fucking around today. It's a perfect day to go out there, let these sorry sons of bitches know exactly what you're all about. Impose your will today, because at the end of the day, that's all we got. So, right into it. Bet the bell.
Why the host?
Excuse me?
The host has low energy? I came in fired up. It's Friday.
There we go. Now he's fired up. Let's do it. Bet the bell. First question of the day. Green or red today, Alejandro? Continue with the energy.
It's going to be red. All right, what are we trading at right now? 384. They'll pin it right to 384.
All right, I love it. Hondo goes red. Mander.
red, definitely red. We got system sell. We got the fallout from FOMC. We have positive delta going into a massive option OPEX here today. Definitely red.
Snipe.
I think.
Red for so many reasons.
That's all that needs to be said. Noah.
I'm going to go green. I'm going to fade the entire panel, and I think I'm going to be right. We'll clip this at the end of the day, and it'll be perfect.
I love it.
I was going to say, please.
All of our
say
confidence
green.
in red.
Definitely not going to be red.
I'm going red too. So the whole panel's against Noah. Next question, Ryan. Pull up the chart. Let's show the people what we're looking at. So we got a pretty massive daily chart and formation forming on Apple. Moneymander has been, showing this chart for weeks and weeks and weeks, and it looks like it's starting to play out. Apple head and shoulders on the daily, starting to break that neckline right here around 136, 137. We broke 140, got some pretty good confirmation yesterday. Are we seeing over under 135 on Apple today? We closed yesterday in the low 136s. I believe that's where we're pinned to right now in the indices. 135 is that next, or excuse me, on Apple. 135 is, to me, that first target on this 140 break. Over under 135 today. Moneymander, take the show.
So I clearly have some bias, right? Because I got short on the name yesterday, but I'm actually going to take the over on this one solely because I think we see a gap fill reversal in the interim. I think today we probably get that gap fill to like 134.85 that we've been mentioning. Maybe get a bounce off of that close above 135. But the key on this one is going to be closing under that trend line support for fallout next week.
Yep. And I think that gap fill would be great because I believe you'd probably get that get half off at 100% risk-free into next week. Snipe, what do you think?
I'm going to have to say it goes under 135. I think Apple will eventually take that dip. And there's some really solid support at 131 on Apple, and I think it might test that.
Beautiful. Note it down, 131. Diamond.
I'm going to go with over 135. I like Mander's gap fill support. I could definitely see that holding up into the end of the day and having them close it just over that level.
Hondo, break the tie.
Under 135. I'm on the Mander train. I want to see him make money. It's Friday.
Let's do it. All right, guys. This leads us into our last question of the day for Bet the Bell. Kind of an interesting one. I'm sure most of you guys that are listening, and obviously our panel, knows about the current SEC scandal with Atlas Trading and some pump and dumpers. So my last question of the day is, I want to know, did you guys see this coming? Did you see this Atlas fiasco coming? I want to start with you, Alejandro.
I think so. While all of this was going on, obviously when the market was really hot in 2021, that sort of COVID market, I think a lot of people knew, and it was pretty easy to recognize that there was clear pump and dumping. But for the longest time, it felt almost normal. And this case has clearly brought forward the fact that what they were doing was illegal, which to me caught me off guard, not because I didn't think it was illegal, but I was just surprised because of how long they were doing these things for. It almost seemed like nobody was ever going to get in trouble. And I also thought about it, pretty innocently because it's just Twitter, right? And that's how it started. It's just Fintwit, people with fake characters as their names and just, promoting penny stocks. And it is what it is. And, it obviously was and is a lot more serious than that. So I was surprised to see this finally come forward, but not surprised to hear that what we thought was going on was exactly what was going on behind the scenes. Unfortunately,
Right.
it is really sad. It's messed up.
Yeah, I completely agree with you. And I think you made a good point in the sense that it just became so normalized over the course of a year and a half, 2 years, however long it went on for. And it just felt so innocent. And at the same time, these guys were making so much money, so much attention, so many followers on their social media platforms that I was thinking, these guys can't be that stupid. They got to have the best lawyers. They got to have the best people in their corner and, following the rules in some sense. But at the end of the day, manipulation is manipulation and it catches up to you. Noah, you got any take on it?
I like what Alejandro said, where it's like a lot. I feel like anybody who was on Fintwit during that time, that's really what sucked me into Fintwit was, seeing all these people making $100,000 days and Lamborghinis and McLarens, and it was like we all saw it, and I think we all understood what was going on, like at the surface level. But I think at the same time, it was when you look at it from that perspective and you look around and you see so many people making money, it almost becomes like, well, it's not my fault if I don't make if I don't make money, right? It's got to be me, right? Everybody else around me is making money. These guys are making money. Everyone in their Discord is making money. If I'm not making money, it's got to be me. And I think that is the damage that to me is the highest level of damage that was done, is people internalizing the fact that, wait a minute, I don't know how to trade, when in reality, you're getting millions of shares dumped on you unsuspectingly. Like, personally, like, that's just not okay. And I think those are the people that were probably hurt the most, outside of obviously the financial loss, if any, that somebody took.
Yeah, and once again, now that we're talking about it, it's on that topic and thinking about it even more. They were really the first of their kind. It was kind of an unprecedented circumstance as far as when you got guys with such big social media influence pumping and dumping stocks. They really were the first of their kind. All that liquidity gets taken out of the market. COVID, people selling, getting out, and then these guys come in and do what they did. So it's definitely good in my opinion that an example is being made of it. Snipe and then Mander.
Honestly, for like years, I'm looking at Twitter and seeing what they're doing, and I'm like always been wondering, how the hell is this legal? How do they keep doing this, and how does it keep going? Because like, it doesn't take much forensic analysis to really see that this is pump and dump. It's pretty obvious what they're doing. But when we look at this, and one thing that I was also surprised at was the volume, guys. $100 million. That's a lot of fucking money. That part was completely mind-blowing to me. But I could say, yeah, I did see this coming, but I thought they found a way to do it legally, honestly. And I thought the law was just messed up.
Gotcha. And Money Mander.
I have to say I kind of was surprised because, at the same time, while I think everyone knew what was going on behind the scenes and it was so public because, they had 250,000 in their Discord. This was like the biggest thing back in 2020 was Atlas trading. I was kind of surprised because I looked at it where, Twitter is your free space to post where you want. And it's not like a pump and dumps anything new, right? Like before it was on Twitter, it was stock twits. And before stock twits, go back to like the 1990s. You don't think these guys on Wall Street were like meeting up for lunch and talking about what they were going to run through the roof?
Well,
I mean, this isn't anything new. I guess I was just kind of surprised that they actually took action on it versus, I don't know. I was surprised to see it so publicly announced and see such a heavy lawsuit come out of this.
Yeah, agreed. And, now that we're on the topic, it gets me thinking again. Just a quick question for the Mander, if you want to bring him in side by side, Ryan. When we think about these pump and dumps, we think about the scandal with Atlas, the SEC, FTC, everything coming together. Mander, I know that you're such a big lover of the crypto space, and you're a hefty lover of crypto and NFTs and the shit coins and whatnot. And this gets me thinking about, what Atlas did, although it was portrayed on a larger scale, and in a full community on Fintwit. All these celebrities, all these athletes who did the NFTs, like my NFT, my crypto, my pump and dump, like what's the difference? It's literally the exact same thing. Now you can make the argument that, okay, the rules are a little bit, you can stretch the rules because crypto, it has no regulation, this, that, and the other. But once again, at the end of the day, manipulation is manipulation. And I truly believe that over time, this is going to come back to all of those celebrities, all those athletes, all those movie stars who had their own little crypto pump and dump. They took off with hundreds and thousands, most of them millions of dollars, leaving their supporters, all their people completely bagged. A year later, not even a year later, 5-6 months later, those NFTs, those cryptos worth absolutely nothing. Manipulation is manipulation. Jordan Belfort said it the best on a podcast that I watched about a year ago. He said, it's going to catch up to these guys. Manipulation is manipulation. What's your thought on that?
Yeah, I totally agree with you, where I think fundamentally it is the exact same thing, but you hit the nail on the head. It's the crypto space. It's unprecedented. It's unregulated. I don't know if the SEC takes action into that because they're responsible for the stock market. It's the Securities Exchange Commission. It's not the Crypto Exchange Commission. So I don't know really whatever comes out of that. I think something should come out of it, though, because it's at its core the exact same thing with honestly a bigger following base, more people to pump and dump this. Like Atlas had exposure to Fintwit. They had 250,000 in their Discord. You have Tom Brady and all these guys with millions upon millions of followers that he has pumping these things.
Yeah, it's a shame. And guys that are listening, I see you put your comments in the chat, in the Discord. Tell me right now. I'm watching the chat. I'm looking. What do you guys think about this? Should these celebrities, should these athletes be held accountable? And what do you think will happen, even though that crypto is not regulated and has that tight-knit security like the stock market? So that's going to do it for Bet the Bell today. Great segment. Had a fun time with this one. Alejandro, take it over, brother.
Awesome, guys. All right, I'm going to go ahead and share my screen here. We're going to talk about the system for just a minute or two. So really awesome day to be trading the system. Yesterday, we obviously got the sell signal on the 30-minute SPX chart, which is, of course, the bearish cross of the 10 SMA below the 50 SMA. But more importantly, guys, and this is what I said in the video that I put out on my Twitter. Remember, I post those short clips. We needed to see a break below the 50 SMA on the 1-hour SPX chart. And so both the charts were telling the same story, which is why we got that really nice trend and why we got sell-off. So coming into today, what you're going to want to watch for is the angle of the 10 SMA on the 30-minute chart. We can see how it kind of flattens out. I always say when we see that it flattens out, that's likely the market starting to tell us to chop and things are going to become more difficult after getting a nice trend like was really steep and coming down hard. It's also monthly option expiration, as we talked about earlier in the show. This is typically a day where it's a lot easier to lose money than it is to make money. The market typically chops around. Having that knowledge can certainly be an advantage. I personally won't be trading today. And this is going to lead us right into our next segment. It wasn't the best week of trading for me, guys. We talked about CPI on Tuesday. We talked about FOMC on Wednesday. Yeah, go ahead and run it, Ryan. So, unfortunately, this week I am the market moron, and oh man, there are some times where it's like, you make a bad trade. I think having like a bad week is obviously a lot worse, and that was just me. I just couldn't make anything happen this week. I traded when I wasn't supposed to. I didn't trade when I was supposed to. Nothing was working. So let's talk about CPI on Tuesday. I chased the move higher, thinking that we were going to squeeze. I never do that. The reason I did that is because the last time, and we were talking about this, the last time JPOW spoke, I sat there with my hand in my pants, not doing anything, And the market just kept ripping and ripping and ripping. And I was like, okay, you know what? If I see the market rip today, I'm going for it. Like, got to take my shots. Did not work. Obviously, we got that all-day sell. And then Wednesday, FOMC, I caught myself trying to play a short below the 50 SMA, thinking that, again, we were going to trend, and they just kind of pinned it. Nothing happened. And I ended up getting smoked. The important lesson here, guys, it wasn't about the trades I took. It was about the fact that I shouldn't have been trading. And as you guys know, I preach patience. It's like my number one rule, patience and discipline, not letting what other people are doing influence the way that you're trading. And I didn't do that at all this week. I was very sucked into this. Let's try to make money on CPI and FOMC. And it cost me, because had I just followed the system and had I just been more patient, I would have gotten short yesterday. I would still be short today. I wouldn't have been the market moron. Peer pressure is a really strong word there, Ryan. But yeah, I mean, it is what it is, and we move on and we learn. And trading losses happen all the time, actually, despite what people might tell you. So it's part of the process, and we just keep cruising.
I want to jump in very, very quickly. I know Ramsey has something to say, but I just wanted to point out that if you guys know Alejandro through the podcast, through Beat the Bell, through the Discord, you know that he's probably one of the most disciplined people that you'll ever meet. And when somebody that disciplined, still struggles to follow their rules, I think that it just highlights the importance of having rules and understanding that, look, like, there's going to be times where you really feel like you want to trade. There's going to be times where you really feel like you should do something outside of your system. And every time that you do that, you're creating a liability, because A, it could not work out like it didn't for Alejandro this week, or B, it could work and then you're reinforcing bad habits, right? So just keep that in mind. You got to have your rules and you got to stick to them, and you're going to break them every now and again, right? And I think that's a perfect example. And you just get back up on the horse, right? He's going to be fine. He's going to come back next week and he's going to absolutely kill it. So
listen, Noah, let's not be nice to the kid and give him, cut him all the slack and whatever the case may be. The guy messed up. He's the moron of the week. No, Hondo, look, as much as I, want to get in here.
This is why I can never host a podcast with you. You're an ass.
Listen, as much as I want to get up here and bust the guy's, push his buttons. I gotta massage our chops a little, the Kane chops. Like, this is what, in my opinion, is the best thing about Kane Capital, right? You take a look at the guys that just went down, these Atlas guys. We literally just spoke about it, posting their gains, posting, they never lose. One guy said he had like a 55 straight weeks of green every single day, 55 straight weeks of just being green, which was bullshit. It was lies, it was bullshit. We're transparent. This guy, Hondo, comes on here, tells you when he loses, he tells you when he wins. He shows his position sizes. He talks about it on Twitter. It's not always, sun and flowers and daisies. This is what the game is about. And the transparency is everything. Humble in victory, gracious in defeat. That's what it's all about. And it's not just trading. It goes for everything in life. And, just being honest with yourself, that's the only way that you're going to get better. Being honest with yourself in victory and in defeat. It's the only way you're going to get better. That's what I think is the best part about this community that we created. Everyone is honest with each other. We win, we lose, we talk about it. We're not embarrassed. It's part of the game. It's part of the growing, the growth in this game. And, that's all really I have to say. I fucking love Kane Capital, man. This is the shit.
When you talked about sunshine and rainbows, I think you were referring to the Care Bear Village.
I was referring to.
Yeah, we don't live in the Care Bear Village.
No,
There's a lot of people that live in the Care Bear Village that think you make money every day trading.
I was referring to the Candyland that I live in my dreams when I get at night.
Unfortunately, it doesn't work that way. And I think Ramsey hit the nail on the head where, you guys see us get smoked live all the time. And I think all of us would have been a great honorary mention for Market Moron this week, because maybe not Ramsey. I chased the volatility on CPI and FOMC, got absolutely smoked both times. But I think this week really showed me how sick the system is. Like, in hindsight, if you had taken emotions out of it, right? Like, I was looking at this and I didn't take either of these trades, but when we opened up from the CPI where we both got long chasing the move, we were 100 points extended, which would have told you sit in cash or get short to the 10. And then we sold off all day. And then FOMC was crazy volatility, chop, 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 chop. We closed the day under the 50. And then the next day we see like 120 point sell-off. And we go, where do we go? We based and set bottom of the day exactly 100 points extended from the 50 SMA, which would have given you like 100-point trades to both sides this week. So the thing absolutely rips. Now I think it's just getting ourselves to be bots and take the emotion out of it.
That's what it is. It's the decision making, man. It's the decision making. It's about trusting it. It's about whatever system you use to trade. Diamond mentioned it. What's the point of having a system if you're going to make stupid decisions? That's the most frustrating part. It's not about losing money or making bad trades or making losing trades. That happens all the time. But I was pissed off because I was like, you take like it's just rookie mistakes, right? But whatever, you can't dwell on it. So we move on. All right, guys, let's start to wrap up the show here with today's top watches. We're going to go around and ask the head traders what it is that they are taking a look at headed into today. This is an important day, guys. Remember, monthly options expiration. And so we want to not be, foot on the gas, going crazy. And so the setups that you see, I'd say take them with a grain of salt, but our traders are going to provide you with the best of the best here. So we're going to go ahead and start with Money Mander.
Yeah, so I'm going to be looking at this Apple Head and Shoulders. No, I'm just kidding. Done that one too many times. Today I'm actually watching NVIDIA and actually into next week as well. So NVIDIA, as you see here, we had a false break of the 200 daily moving average there, which has consistently sold 3 straight days on every tap above it. So clearly a ton of exit liquidity above there. And we have the mother of all rising wedges on this daily chart here. I've never seen anything like it. So if this gets a daily candle close under that support level there on this rising wedge, I'm going to be watching that. Because if we also go over to the weekly, depending on today, this weekly is set to close in a nasty inverse hammer straight off of the 50 moving average on the weekly here. And you can see how broad this really falling wedge is for potential downside to that trendline support. So this would be a big one. Me and Diamond have been talking about it. This sector got way too hot.
Yeah, guys. So my top watch for today is the Apple Head and Shoulders. Come on, Ryan. He's got Microsoft on there. No, this is the Apple Head and Shoulders. And look, Money Mander's put this thing up for so many months. It's just only right that I take it when it starts to play out and call it my top watch. We spoke about it on Bet the Bell. 140 psych level has broken to the downside. We have this Head and Shoulders neckline being broken as well. I'll look for some sort of a short entry on a break hook and go if we can confirm below this neckline or even another 140 test. So this Apple Head and Shoulders top watch for me today and probably into next week.
I have to say, I take a lot of stupid trades and I get absolutely smoked on a lot of them very publicly. But seeing this one go exactly according to plan has been like the highlight of my December. And I hope it flushes so then I can get back on here in a week and go over the awesome Santa rally that Coach saw coming.
Dude, it's got to feel – it really has to feel sweet. There's nothing better than a daily setup, a beautiful chart pattern, a beautiful neckline, whatever the case may be, break, hook, and go, but actually taking advantage of it, especially seeing it for so long, form. It's got to feel good. But, yeah, man, I'm looking to join you in some way if I can get a good entry.
All right, and last but not least, Stock Sniper.
What's up, guys? So here you can see on my trend spider chart, I got my daily levels. The 4 levels that I'll be looking at today is 386.41. That is going to be a nice rejection level for today. 385.35, 384.03, and certainly last but not least, 383.29. Now, my top watch today is going to be 383.29. If we take a look in pre-market, we could see a nice bounce off of this 383.29 level. Not to the exact cent, but we could tell that the buyers did start to step in the pre-market at this level. That is overall what I'm going to be looking for today.
All right, thanks, Snipes. And that's going to do it for this morning's show, guys. We went about 5 minutes over, so you guys got some free content, extra innings, free baseball. All right, guys, that's going to do it for the week. It was quite the crazy week, obviously, as we talked about on the show. Hopefully everybody made money this week. If you're like me and you didn't, we'll get it next week. Friday, of course, is not the day to force things. If anything, I found myself, whenever I try to make money on a Friday, I typically do something stupid, and it really pisses me off for the whole weekend because I don't have another shot until Monday. So, all right, guys. We'll see you back morning. Last thing, if you guys aren't aware, if you're new to the show, So there's the 5 of us that we're on today. We have 7 total head traders, including Coach Dipka and Mo Mamba, and we trade all day, every day live in the Kane Capital Discord. You can go to kane-capital.com to start trading with us today. Once again, have an awesome Friday, guys. Have an awesome weekend, and we will see you back here on Monday morning at 8:30 a.m. Eastern.